I'm Keith McCullough, and welcome back. It's day 3. I got a lot more energy as I kind of cruise into day 3. Eric and I were just talking. He said, "You getting tired of this or what?" No, I'm getting excited. Like, I love having real conversations, if you can't tell. If you take in your life, how many times do you have a real conversation for 45 minutes to an hour, just face to face, looking people in the eye, just getting to know them, understanding their process? For me, that is education time. So on this topic in particular, we've had a lot of feedback. I know that there's a lot of education to be done. I'm getting educated on this. I mean, prior to me buying silver, which we're going to talk about, bags of silver, like junk silver, like I would never have done this, but I just did. And all I'd done was buy physical gold, and I'd buy the ETF, AAAU, or paper gold, via the GLD. So I'm pretty much a neophyte in terms of doing the types of things that McAlvany and Eric Larkin himself have expertise in doing. So for me, it's great at this stage of my life. Eric, well, first of all, welcome.
Thank you.
Thanks for making it from, you guys. Do you live in Durango?
Yeah.
So you live where the company was founded?
Yep, and I grew up there as well.
Oh, cool.
Yeah.
So thanks for making it all the way.
Yep. Yeah, it's a long ways away. A little different out here than it is back home.
It's kind of the Antichrist of Wall Street.
A little bit. Yeah, I just trade I have mountains, you have high rises, right? Same thing. We just, a little bit different. But no, I appreciate the invite and letting me come out here to talk to you guys.
Yeah, we'll get into the how do you buy this stuff, where do you buy this stuff, the fraud, the quality control. There's so much to discuss.
Yeah.
But I want to take a step back first. I mean, we met you, and a lot of people that are watching this met you in our community, right? Like, you just kind of popped yourself in there. Like it is in our community, we don't tell people that they should work in skyscrapers or mountains.
Right.
We just accept anyone who's willing to learn, and wants to kind of keep pushing it forward. So you would be at Hedgeye Live. You've met a whole bunch of people.
Yep.
That's why even Roosters, you're helping Rooster buy the bags of silver.
Rooster loves his commodities, man. We even looked at buying Rooster some copper, some bullion copper, but that was a nightmare. We did not do it. So yeah, but he loves his commodities.
And he loves you. Like, he's like, and our community really I could give a rat's ass who has what title, or who is who supposed to be who in this world.
Right, yeah.
In fact, that's probably a bad thing, in many cases. I mean, I know billionaires who are the nicest guys you've ever met that would never tell you that they made a buck, and then I know billionaires who are total assholes. The first thing they'll tell you is how much money they make.
Yep.
It's like, it doesn't. What I learned in my life is, if you actually pay attention to somebody who's got expertise in something, you could learn something.
Yeah.
And then you can get better.
Yep.
So in this case, just because we're so bullish on inflation, and the direct to the vein, I don't do drugs, but a direct to the vein way to do that, or to hydrate yourself if you're hungover, the direct way to the vein is to buy commodities. So this is a natural extension from the equity ETFs to buying the physical stuff. But before we again get into the transactional component of that and the process, why do you do this?
Great question. Yeah, and it's great for me that you don't care about all the letters attached to my name, because I don't have any. So if that was the case,
You have one very important one, which is you're the number I call when I want to buy shit.
That's true.
Yeah, and that's trust.
Yes,
that's super important.
Yep.
Yeah.
But that's a testament to you, right? Like, you can say all those things, like, hey, we really don't care if you went to Harvard or have all these things. You can say that, but I did not. All right, I'm here. Why do I do this? That's a great question. I didn't grow up in the gold industry. I didn't grow up in the financial industry. My parents are both very blue collar. Very simple reason that I ended up at this firm. It's located in my hometown, and I was being priced out of that hometown. I needed a job, right? I grew up with some kids whose parents had worked there. Didn't even really know what they did. I just knew that they could afford to stay in the town that I wanted to stay in, right? And so I just relentlessly started calling them. I knew one guy over there, and at the time I was working as a buyer of a sporting goods store, right? So I would buy, whether that's clothes or ammo or whatever it was. That's what I was doing. I hated the job, but it's what I was doing. So just started hammering this guy's phone number. Poor guy. I won't do that with your phone number, I promise. But for like a month straight, just kept doing it. And finally they gave me an interview with a guy named Tori, who was the sales manager at the time, has been a great mentor for me. And I told him at the time, I remember talking to my dad, I'm like, can you actually buy gold? Like, like The Rock, you know, like, is that what these guys are doing? And he's like, hell if I know, you know? So I literally knew nothing, right? And so Tori gave me a chance, and all I told him was like, look, I don't know this market. I have this weird confidence, right? Where like, I think I could probably do anything. I told my wife before I came out here, I was like, Keith wants to interview me. I think I might run for president next, you know? And she believed me. She's like, please don't, you'll get assassinated. I'm like, well, you didn't call me crazy. Anyway, I just told him I would grind, right? Like, yeah. I'll do whatever I can. I can learn this. I've learned other things. Like, just give me a shot. And he did, and it's a great thing, right? Our company was founded in 1972 by Don and Molly McAlvany. Amazing people, right? You just wouldn't believe these people. They created this amazing company, have helped people for years, and you know, I'm sure they did well for themselves, right? Mm-hmm. Like, you build a successful company like yourself, like, you're gonna reap some of those rewards. In 2008, Don and Molly decided it was time for them to retire. Mm-hmm. And instead of, you know, like pulling up the yacht and just going and chilling, they opened up a bunch of children's homes in the Philippines and Asia, and just decided, wow, you know, there's a lot of kids out there that need a lot of things, and we've been blessed. And so we're actually moving to the Philippines, and we're gonna live in an orphanage with 50 kids who have nowhere to go, and they're still there to this day. Wow. They have been there since 2008. I think Dawn is pushing 90 at this point. Mm-hmm. Molly's in her 80s, and they're still just happy as could be. They spend their time with some kids in the Philippines, just trying to help people out.
I didn't know any of that.
Yeah.
I didn't know, like, from that you sold sports equipment or,
yeah.
or any of that, but it really is, because, you know, when you're in the business of something that other people do, mm-hmm, you know, some people would say, okay, well, those guys are brokers or whatever. I mean, there are a lot of people watching here. We're in that same business. We're just brokering other things. Yep. You know, I'm brokering ideas and process. Some people broker, you know, commission sales trading, whatever it is. Right. But what you find is that the special firms have a story like that.
Yep.
You know, the why is really grounded in the principles of the people who built the place.
Yes.
And that's amazing. And they're both still alive and kicking.
Yeah.
Awesome.
Yeah. And just
they're probably
just amazing people. Right. Yeah. Hopefully. Their son David took over the firm in 2008, and he's been running it ever since. And I would like to touch on this too, because one of the things that we're going to touch on today is how we do things a little bit different, right? Through ratios and premiums and whatnot. And Coach, you know this better than anybody. I didn't read your book last night. I opened up the PDF after the guy called you fat, you know, on Twitter. You know, that was amazing. If you guys, I've gotten an inside look, right? I've been at the office since Tuesday, so just hiding in my corner over here. But Coach, it's crazy to watch what you do. I mean, you get in here, you're probably still on the call. He comes in here, he does the macro show, goes out there, trades for a little bit, and then it's just interview after interview after interview. Then he's gone doing his next thing, right? So a crazy day. And I got to watch that for the last few days, and then I got back to my Airbnb last night and pulled open Twitter, and I saw the guy that was just like, hey, Coach, you know, love your ideas, that's all great, but you know, you look kind of fat and you're gonna die. You know, essentially is what he told you. And I just thought, like,
exactly what it was.
Imagine doing everything you just did for the entire day for free, plus running the business as normal for all your paid folks, then putting out a free book only to just be called a fat ass by a guy. But he was a sub, so it's okay. He did say that. But.
Well, he's not lying. I mean, I'm not the skinniest guy.
Yeah,
I mean, I'm definitely not the skinniest person. But thank you for saying
yes,
that.
And on that note, long story short, I did pull up the PDF of the book, and one of the first things that I noticed was you thanked your team, right? And it wasn't just like, hey, thanks to the team, you guys are awesome. It was like, I want to give thanks to my team. Every person in this building was listed, right? Like, every person's first and last name was on there. That's an incredible thing. Like, that took me back. That's all I read, right? You're getting fat and lazy, so you didn't record it on audio, so I didn't listen to it. But anyway, I just thought that was amazing. And on that note, like, yeah, the owners of our company are amazing people, and they've built an amazing platform for us. But as you know, it's the people, right? That the employees that come in and really change things. And I'm not talking about myself. But one of the great things that happened for our company in the 90s is that this father and son duo, John and George Etz, came out of the desert in Arizona, and they had been wholesaling physical precious metals and had these strategies that they had used that were like pretty compelling. So they brought that to us more on the retail side and to get it to investors. And
great.
So just want to make sure that I give George his his due, because without him, I wouldn't be there. I would have been bored long ago without this strategy. So,
well, I mean, one of the core strategies, and you already mentioned it, is the goal. The ratio. You're looking to compound using the ratio. So, I know what that means. Finally, but can you explain that to my third grader?
First and foremost, welcome to Hedgeye Nation. Make no mistake, my number one goal is to help you preserve and protect your hard-earned capital. Who helps you with that? Like, how many people have actually helped you preserve and protect that capital? They can't. They don't have a process. You need a better way. We need to get better each and every day. There's a lot of baggage out there. There's the old wall, a lot of bullshit. There's CNBC. That's not who we are. We have a process. We're going to help you get better. We have a team of over 40 analysts that are going to help us do that, and I'm looking forward to it.
Hedgeye founder and CEO Keith McCullough's long-awaited new book, Master the Market, is available now. In this 52-page ebook, Keith McCullough distills decades of Wall Street experience into actionable insights. Discover how to navigate market cycles, avoid major losses, and invest with the confidence of a seasoned pro. Download your free copy right now. Go to hedgeye.com/book. That's hedgeye.com/book.
the gold-silver ratio, simply take the spot price of gold, divide it by silver, right? It's going to give you that number.
She can do that.
I'm sure, right? And now all she needs to know is, okay, right now I think that ratio is somewhere around 85 to 1. So it takes 85 ounces of silver to equal 1 ounce of gold. All right, now, Gendron, if you can pull up just that gold-silver ratio chart from 1975 to present, that's just a chart, right? Just like anything else. I just told you I worked at a sporting goods store before this, right? So I don't have like this immense research background, but I have studied this stupid chart, and I know more about it than I care to admit. And so, yeah, we're essentially playing the gold-silver ratio. And this, look, I wear a lot of different hats, Coach. We work with a lot of RIAs and brokerage firms. So part of my job is just taking orders, right? Like you call, you know what you want to place an order, that's fine. I can take that order. I'm going to try to give you my advice, and you can either take it or not. That's fine. Everybody's buying gold for a different reason, right? And where our strategy fits best is a lot of folks. Judy Sheldon's book came out yesterday, I think.
Yep.
If you want to know why to buy gold, or if you should buy gold, don't call the gold broker, right? Like go listen to Coach's Talk with Judy. Listen to what gold is actually doing. And then if you make that decision, find someone to buy gold from.
Yeah, Judy's book, I don't know, Gendron, if you have it, it's called Good as Gold, and we did a real conversation. It was the most widely, and I've had some, thankfully, and I feel blessed for that. I mean, the audience that we have at this point is, it's significant, and the old wall doesn't like it.
Right.
The elites don't like it, but a lot of people like it.
Yep.
And it's like Judy Shelton that was the most views that we've had in a while.
Yeah.
Because a lot of people do need somebody to explain what they're almost like intuitively coming to conclude without having written a book about it.
Right.
So that's good.
Yeah.
But back on this chart. So what is like, and again, I know the answer because I had to go through the actual exercises. But somebody calls you and says, okay, look, that's one thing. I actually did that, and you're like, I don't know if I do that, so I decided not to.
Yeah.
But if somebody calls you and asks what to do,
Yep.
How do you use this to give them the specific answer?
For sure. If their goal is to own gold over the long term, right? They're not necessarily looking for it as a trade. They want to own that hard money. Maybe that's right, maybe that's wrong. Not my job to decide. If you want to own gold long term, physical gold, we will use this ratio. So for instance, right now, 85 to 1 lets me know that silver is undervalued relative to gold, right?
Mm-hmm.
That I can use the averages, I can use a whole lot of other things, but it's undervalued. So if you're like, yes, Eric, I would like gold long term, and you came to me today, instead of placing you in 100% gold, it's going to be essentially a static position. It's going to move with the spot price, but as every Wall Street investor knows, gold doesn't pay yields, there's no dividends, right? That is what it is. Instead of putting you in 100% gold today, I would push you closer to, and again, depending on your age, your situation, everybody's a little bit different, everybody has a different risk tolerance, but we would say, let's go 20% silver instead of 100% gold. And I'm not calling for the price of silver to rip back to 50, right, or anything. I'm just looking for that ratio to compress. And when it does, I'm going to flip out of the silver and back into gold. We're essentially playing the arbitrage game. And by doing that over time, because as you can see on that chart, it doesn't stay still. That's a volatile chart. We compound substantial amounts of ounces, right? So we have clients who are long-term clients with us who have held this physical gold position since, let's just call it 2000, right? They've got 4 times as much gold that they started with without reallocating more dollars to us. That's as simple as that. I'm not here to speculate on what the price of gold is going to do, what is driving it, what the next macro event is, right? Like, there are far more qualified people to speak on those things than me. I'm just the one building, right? I'm in the trenches just building it.
It's simple, but some of the best strategies in the world, if they cannot be defined simply, they're just, well, in some cases they're frauds,
right? Yeah.
Or they're just wrong.
Yes.
The amount of people that I've seen try to trade options on different desks that I've been on, the smartest thing you may have ever heard. They're so smart that I can't even understand it. Happens in crypto a lot too, but because there's nothing to understand. Like, it's not actually practical. But here, you're basically funding your long-term position by capitalizing on discounts. And discounts appear and then they disappear.
Correct.
Now, if that's why I called you on platinum, because platinum's got a deep discount, deeper discount than silver. So I'm buying both. I'm long all 3. So this is a really kind of like a practical exercise to go through, because you talk a lot about this as well, and I look at it this way. I mean, from a modeling perspective, I care about the volatility attributes of the asset. Right? So I can punch into the machine. I know what platinum's vol is. I know what silver's vol is. I know what gold's vol is. Gold's got the lowest, then it's actually silver, and the highest currently is platinum for whatever reason. So if I'm seeing that big implied premium, like people are buying puts on platinum because they're scared that it's breaking down, et cetera, then I start to see an opportunity. If you have the long-term setup, if you have the future quads that are inflation, in theory, which is, it's not just a theory, it's a back test, right? It's not like Keith thinks that it's undervalued. No, it's like, if we're going to see inflation reaccelerate and gold go to multiple all-time highs, then platinum and silver should catch up, because all commodities are going to go up anyway. So it's not that complicated to understand. But you have a strategy to help me capitalize on all like the moving parts of all 3. But let's just go through that. So I call Eric. I'm like, can I buy, like, I want to buy some bars of platinum. Like, and he's like, okay, you want to buy bars? And he calls me coach. He's like, hey, coach, so what size? What kind? You start going through the whole thing. And you walk me through it, and you told me what cost what and what weighed what. And I've never owned a bar of platinum, obviously a gold bar. But those are I get that. But you're like, they don't, I hear you here, but they don't really ever trade at a premium. Can you go through that?
You bet.
Because that is surprising to me, because it has the volatility attributes that earn it a premium when people are considering it risky.
Right.
So on the way up, you should get the premium.
And funny enough, all those things that you can punch in and you can see gold's vol and platinum's vol, I don't see that, right? So one of the first things that Coach asks is like, all right, silver or platinum, which one's going to outperform? And I'm like, well, let me check my source. That's you, coach. I'm not sure, but let me tell you what I see in the physical market, and that's exactly right. So one of the things that people need to understand, because a lot of folks are talking about gold, a lot of folks are talking about silver. Yeah, it's a great buy, right? And then it kind of gets left at that. They can give you 100 very smart reasons of why to buy it, and then it's like, yeah, go buy it. Then you have these options, right? You can either buy paper gold, you could buy GLD ETFs, or you can move into the physical market. In the physical market, there are a ton of different products, okay? So let's just go with silver, for instance. There's a 1,000-ounce bar, always gonna have the lowest premium, and that's a static premium, right? That premium's not gonna fluctuate, so that's kind of my baseline. Then you've got a 100-ounce bar, which is gonna carry a little bit more of a premium, but same thing, static, not gonna fluctuate. Then you have things like junk silver, right? And here's where I'm gonna offend the gold bugs and the folks who are already in my messages telling me not to allow Keith to call it junk silver, right? It's hard money, constitutional money, right? There's a story for everything.
Oh, I
in this
need to
industry.
I need to put on the
Everything.
equivalent of some laser eye.
It's right. We invented laser eyes, right? Before laser eyes, okay? And
That's where it all came from.
That's where it all came from, right? Holding the
silver
bag,
ones.
you don't want to be left holding the bag. Like that's the bag of silver, right? It's the truth. But
How pathetic is that, right? Like that human beings need you to believe what they believe because they can't think of anything else.
well, then they get mad if you don't.
Yeah, that's what I mean.
right?
Like, I mean, if you're part of a cult and you can't believe anything other than the cult, of course you're not going to like, Hedgeye Nation,
right?
because we're going to question the cult.
Exactly.
We're going to tweak the narrative of the cult,
Exactly.
So that's interesting. I didn't, I guess I knew it, but I didn't know it specifically.
Oh, it's
a
the most narrative-filled cultish space I know of.
Yeah.
right?
So
Like,
so
and
don't you?
there's-
They say don't call it junk, or God forbid, don't buy it. Like some people say, I had multiple people, when people see me with these I have these Instagram videos that I'm trying, and that's
Right.
what I was doing. So I had it like this, and
Yeah.
because I got like a fat face, this thing was bopping my chicken neck was bopping,
Yeah.
and it's like that guy's fat, it's like, or that guy needs to brush his teeth, or
Right,
that guy needs to understand that junk silver is a joke, or that like that's one of the best things about Hedgeye Nation.
It is.
I get it all.
And
All
that's
the
kinda-
crazy, all the thought.
And it's fun because there were so many chirps last night, right? Like we were going back and forth, you and I, on Twitter last night, and then all the comments come in, right? And it's like, well, he's buying junk silver because it's constitutional money. He's buying it because it's small denominations and he can barter with it, right?
No,
All of
neither.
those things, right? And
I didn't even no.
Right? Was that part of our discussion, right?
No.
Was it like, hey,
No.
coach? Yeah, no, okay. And that's the great thing. So, here's what I learned from Hedgeye, right? When I came into this 4 years ago, they're all just tickers to me, right? And so I don't need a story. I don't care. I see junk silver and I don't think of like mintage dates and all these things. I see a V because it's volatile in the premium. And then there's three numbers that come to my head, right? There's 1.4% low end, 42.5%, that's the high end, and 10.5%, that's the average. Those are all just premium numbers in my head, right? The reason I told you to buy junk silver is because there's no demand in the physical market right now, right? Gold's moved strongly. People would assume that we're very busy, but we're not. It's very slow. Premiums in the physical market, Econ 101, right, which I never took, supply and demand. There's a whole bunch of supply with a little demand. Those premiums are compressed. We're buying junk silver right now because you got it at 1.8%, 1.85% over spot. In 2022, we were taking people out of bags of junk silver at 42.5% over spot. That's all I'm looking for. I don't need the story. I don't need any of it. I'm just, and guess what? I have no emotional attachment to those coins.
No, you're at what I would call the low end of the range on the premium.
Yep.
There's a defined range.
Yep.
And you buy at the low end of the range.
Yes.
If the underlying is a bullish trend. And that's exactly what we have in my language. And I really don't care. Like
Right.
I won't, people think, I mean, I read a lot of books, but I do not read these people, that their entire being is that narrative.
Yes.
What a tough thing to have.
Crazy.
Like
Right.
being like Peter Schiff or somebody. I mean,
Right.
It's like really?
Yeah.
He was one and done on these real conversations, by the way. Because he would be like the equivalent to me of like Old Wall on gold. Like he's like, it's my way or the highway, et cetera, et cetera. Whereas in Hedgeye Nation, it's totally different. They're all, like you said, they're all just tickers. They're asset allocations that we can buy and sell. Might be cool to have multiple bags of silver, in the, I've been advised by my friend John Pistilli, who's laughing probably right now because he sent me a note laughing that I was buying. He's like, I think he eventually knew I would, but I'll never forget the story where he bought so many bags of it at like much lower cost. He's the one selling us bags probably now. That it sunk the concrete slab in his garage. And he had a problem, right?
Yeah, that's a problem. That's an issue.
So we have like you have there is a thing like any gold bar or coin that I've ever bought I've never sold, right?
Right.
So there is something there, and obviously those were good decisions. But I mean, they may not be.
Right.
But I don't care.
Yep.
I'm not going to give them back.
Yeah.
So that's really the question here. Like, obviously these are, explain like how heavy the bag is, first of all. Like if you just,
Yeah.
it's quite, I think you even have some coins, but I mean.
Yeah, I do. I have some junk silver just to show. Nothing too special about it. That's a $50 Kennedy.
Yep.
It's quite literally a 50-cent piece, minted pre-65 that contains 90% silver, right?
And that's what, like I'm not trying to poo-poo the idea. This is Kennedy. Yeah, it's Kennedy.
Yeah, that's Kennedy.
It's, I should know this. I own this stuff now. No, but it's like if you're Constitution, if that's your whole thing, if you like the Constitution, I like the Constitution. It's not exactly abided by in all different ways anymore, but rule of law, all that stuff. But if you like, my dad likes JFK.
Yeah.
Now when I go see him tomorrow, because I'm flying home, he's gonna, I'm gonna pull this out at the dinner table.
Yeah.
So now it's like. I got nothing. I mean, I'm wearing a congressional golf. This is in DC. Like I'm not anti-DC. I'm just anti some of the people in DC.
Right.
But this is I can understand why one would be like patriotic and wed to what this looks like.
Right.
Right.
Yeah.
There's nothing wrong with that.
No, it's cool.
Yeah.
Your kids will think it's cool. It's fun to show them what real money used to look like, right?
Yeah.
That's
used to look like, but it's still real money.
It is still real money.
Yeah.
But in the same breath, if that coin is at a 40% premium over the price of silver, you're not going to have any problem letting go of it, right?
Right.
And we'll move into a product with a static premium, and you'll have a lot more ounces. Right?
And you have some older ones there, right?
Yeah. So there's the Franklin.
And when you buy a bag, you just get all random.
It's going to be random. Yeah.
Franklin, like that's so awesome.
It's really cool, and then that's the Walker.
Walker?
Like, yeah, the little lady.
That's nice.
Liberty walking on there.
That's cool.
Yeah, they're neat. But again, I don't. Get married to.
It's like when I was growing up, because I was born in the 70s. Like I'm not from the future on this one, but I mean, the number one thing in it, and it's in Canada, so you have it's maple leafs instead of on gold coins.
Yeah.
The number one thing my nana and my papa would talk about, like in terms of what we were going to inherit, were those coins.
Yep.
Like that was the thing. If you had those things.
Yep.
But it's not like they'll come in. They're not they're not fads.
Yeah.
They come and go in terms of popularity, but they've existed forever.
Yes.
Right.
Yes.
So when somebody says there are a variety of issues with this, right? Like if I believe all that, but this coin's been clipped, like coins have been clipped going back to Rome's denarius, silver coins.
Yep.
How do you know? Like, how do I know that I'm buying a bag of silver that's not bullshit versus real stuff?
Yeah, that's a great question, because that's a problem, right?
Especially if I'm like really like, oh, JFK.
Yeah.
I like Benjamin Franklin. My dad I'm so happy.
Right. Yes.
But you're so happy you're blind.
Yep. So one of the things is knowing your dealers, right? That's the first and biggest one. So like I said, we've been doing this for 52 years. We only deal in COMEX approved metals, right? So only products and items that are approved on the Commodities Exchange. The other thing that we do is run every product that we get through the depository. Okay, so we have a storage account with Delaware Depository. That's where we store the bulk of our product as well, right? That we're shipping and whatnot. And the technology that they have to get metals in and out of their facility to make sure that it's not counterfeit is beyond anything I know of, right?
Really?
Oh my goodness. When you go to visit the depository, because anybody who stores their stuff there has the ability to go pick it up, right?
I'm going there.
You can go make an appointment.
I mean, would anybody that thinks they know about this stuff, with any credibility, say, yeah, but to that? I've seen some fraud coins in and out of there.
Yeah, I haven't.
No.
Yeah, maybe they could, right? And there's a lot of other people in this industry. We haven't had that issue. We did have a guy one time accuse us, because here's the other crazy thing is that I ship this stuff to a lot of people, right? A lot of people choose to have it in a storage account. A lot of people take delivery of this. To each his own on that. It depends on why you're buying it.
You saw the email with my wife.
Yeah.
I'm like, Laura, okay. You're gonna get some like heavy. It's gonna be heavy. You got to wire this amount of money. And she, like, after that email, because I didn't even tell her about it. I just CC'd her on it.
Yeah.
She's like, she walks in my office. She's like, really?
Yeah.
And I'm like, Yeah.
Yeah.
So, and you know, she went. You don't have to go to Yale to be smart, but she's definitely one of the smart people that went to Yale.
Yeah.
And I explained it to her, and she's like, okay.
Yep.
Cool.
Yep.
She's like, where's that safe that we were going to bring to the Bahamas? And it was just on to the next thing. But but it's an actual thing, right?
Yes.
Like, so if I buy a bag of silver from you,
Yep.
I wire the money to you.
Yeah.
You send me the bag
Yeah.
to my because it's not at the door yet because we bought it yesterday.
Yep.
That bag.
Yep.
Or those bags or whatever. And then that's it.
Yeah. So let's just pretend I was at my office right now, right? I'd get your wire from Laura today, most likely. I don't know what today is, Thursday. And I'd email and be like, hey, Coach, we got the wire. Your product is going to ship either Friday or Monday. I'll let you know when it goes out, right? That's coming via FedEx. Every day we're sending.
So it doesn't come like via Brinks?
No.
Like,
Not
so
if, I mean,
the people, it's insured, right?
Exactly.
So, and I'm sure people have stole the bags.
Yeah.
Now my house is gonna get fucking robbed.
Yeah.
I just told people it's gonna be on the front porch.
It's also very true. Signature required package, so hopefully they don't just leave it sitting there.
Okay.
No, we have a massive insurance policy through FedEx, right? So there's no responsibility on the client until they sign for the package. We do use Brinks and Loomis a lot for transport when we get into some real high net worth stuff, right? If we're gonna, be above our insurance limits, then we make other accommodations, and that happens frequently.
That's a thing.
Right? It's a thing. It's
I'll never
definitely a
forget
thing.
this guy at my golf club. He in 2011, because I bought gold in 04 for the first time, and by 2011 Bernanke had devalued the dollar to like a 40-year low.
Yeah.
Didn't even talk about it.
Yeah.
Everything priced in dollars like gold. It was roof. That was his prior all-time high.
Yeah.
So it's golf clubs in Fairfield County, Westchester, are one of the best contrarian indicators of a market top, right? Like, because that's where the dentist and the doctor is telling you how good it is.
Yeah.
In this case, anyway, I'm not going to go on the dentist story, but one of my buddies, he's play with him all the time, and after it's really started working, he's like tells me one morning, he's like, I took delivery on that stuff. He goes, you didn't tell me how heavy it was.
Yeah.
And I said, well, what do you mean? How much did you buy? And he told me. I was like, holy hell.
Yeah.
I mean, and I think he damn near bought the top.
Yeah.
But he's like, he telling the whole story of his wife had to come out with the dolly.
Yeah.
And
It's a nightmare. It can. You need to know what you're taking, and I try to be very clear with people on that too.
And there's a point to this, which is, my friend, I'll just call him Dan. His name's not Dan, but Dan, you don't have to do that.
Yep.
Like, we can store it for you, right? That, for many people, is that the majority now, that people wouldn't take delivery, or is there?
You are triggering the gold bugs right now too, just so you know, and you don't even know it, right?
Really?
Because
That's awesome.
What they're saying right now is, if you don't hold it, you don't own it, right? Shouting at me. If you don't hold it, you don't own it. And like, okay, I hear you. Okay, I do.
It's like me telling the crypto crowd that quad 4 matters.
Right.
Kind of something like that.
Yeah. And their point is that the government could come and take it, right? And if it's a depository, like, you're not going to have access to that.
Has the government ever confiscated gold from the depository that you guys use?
No, not from the depository that I use, but they're just looking back at American history of like when they kind of closed that gold window on us, right? And I think what people fail to realize is gold's role then versus gold's role now. I don't know that would happen again, right? And they didn't necessarily tell people they couldn't own it anymore, and they didn't come to your house and take it. What they would do is not allow us to deal in it, right? So you're not going to be able to turn it back into US dollars. Could that happen again? I don't know.
So what happens if you turn that upside down a bit? Yeah, I always like these dogmatic, narratives, because if you actually just take the opposite of it, they wouldn't do that.
Right.
So, okay, you're scared the government's going to confiscate it if it's in somebody else's warehouse?
Yep.
That's the main thing?
Yeah.
So you're not legit because you don't own it?
Right.
Well, what if I know that you own it and I go steal it from you?
Right. Yep.
Because it's in your house?
Yep.
I mean,
right.
What's the answer?
Exactly.
Well, I just not.
Yes.
It's the same point.
Right.
It's somebody's going to take it from you.
Exactly.
Okay.
Yeah.
So,
yes.
but just the I think probably for some people. I mean, if I keep doing this, I mean, I'll tell you, Laura's not going to be happy. She's going to be like, well, you carry it.
Yeah.
There's a practical reason why people don't want to take delivery.
Yeah, it doesn't make sense, right? Like, do you really need, like, there might be a point where you're like, I should probably have like a $500,000 exposure to silver. And if the premiums in physical silver are rock bottom, it'd be a wise move to do it in that.
Yep.
You don't need $500,000 worth of silver at your house.
Yep.
Like that. Okay, even if the world's gonna end, right? Like, you're all right, apocalypse is coming, okay?
Yep.
You don't need $500,000 worth of junk silver at your house for it either, right?
No.
I live in the freaking mountains, coach, right? If the apocalypse happens and you come to my house and you're like, hey, I got 500 ounces of gold, let me have one of your cows. I'm like, I'm good.
Yeah.
Like, I don't really need your gold right now. This is the fourth turning. That'll be happening in the first.
And there's another reason, which I didn't know, of course, until I talked to you. And let's use the example of if you buy it through your trust. Because I can either buy it the way I did, or I can buy more of it with my trust. So when you start to talk about bigger numbers like that, can you explain why? Just the dynamics of the trust and how that happens.
You bet. So with the trust, it would need to be stored for you, right? So we would open up that storage account, and I would like to be very clear too, because there is a lot of fraudulent things taking place in our industry. We don't store the gold for you or the silver. We will help you set up that account with the depository. They are completely separate from us. We don't get paid any money from them, okay? They get audited by another third party every year, and then someone from our office goes out there once a year and audits all of our client inventory as well. So complete separation, and that's what you want, right? One of the first pieces of advice I give folks in this industry is don't store with the dealer, don't buy from a dealer who's claiming to store it for you as well. Not saying everybody that does that is bad, but I have seen a ton of companies go under because they don't actually have that gold, right? And they're like, yeah, we'll sell you $100,000 of gold and keep it in our vault until everybody goes to liquidate, and then
Ponzi.
Yeah, it's just like crypto, just like anything else, right? So we don't want anything to do with it. We can make a lot of money in the storage world, right? They charge 50 basis points. We have a ton of money under management. If we could keep that 50 basis points, that'd be nice, but it's not worth the optics, and it's just good to have that separation.
Yeah, so with my example, if my trust buys, to use your number, like $500,000 worth of silver, then the trust pays 50 basis points on the storage fee.
Correct.
That the trust, if you have a trust, you can't, that's the point of a trust. You can't, the trust can't buy something and then it shows up at my house.
Right,
I don't know if there are laws around that, but that just, to me, doesn't pass, it's not logical.
Correct.
But it's 50 beeps, that's kind of the standard, or can you get
It is. If you're swinging a bat, we can usually get the depository to work lower.
What's a bat? Like 7 figures?
Yeah, I would say if you're 7 figures.
Or do you have to be 8 figures?
No, I think a 7-figure account, they'll at least, I would hope, drop a little bit. Usually I try to get them to match GLD's fee, right, which is 40 bips. That makes sense to me, right?
First and foremost, welcome to Hedgeye Nation. Make no mistake, my number one goal is to help you preserve and protect your hard-earned capital. Who helps you with that? How many people have actually helped you preserve and protect that capital? They can't. They don't have a process. You need a better way. We need to get better each and every day. There's a lot of baggage out there. There's the old wall, a lot of bullshit. There's CNBC. That's not who we are. We have a process. We're going to help you get better. We have a team of over 40 analysts that are going to help us do that, and I'm looking forward to it.
Hedgeye founder and CEO Keith McCullough's long-awaited new book, Master the Market, is available now. In this 52-page ebook, Keith McCullough distills decades of Wall Street experience into actionable insights. Discover how to navigate market cycles, avoid major losses, and invest with the confidence of a seasoned pro. Download your free copy right now. Go to hedgeye.com/book. That's hedgeye.com/book.
I'm not trying to convince anybody that it's better, but hey, if that's what you're worried about,
that's good.
And it's a storage facility, right? These are instant transactions. I can do it as fast. If the market's open, boom, done. You don't have a ticker on your screen, right? It's fun. The old head traders that I get to talk to on the institutional side, every time I kind of explain how our business is going, they're like, "Oh, you're working like an '80s trade desk. That's how we all used to do it, right? It's all phone calls. We're talking to trade desks," and they kind of enjoy that. I never got to experience that, but apparently I'm essentially living the life of an '80s stockbroker.
That's good.
Right now.
Well, we have let's see, we have 7 minutes left, and I know we can go a couple different ways. I'd leave it up to you though. But you wanted to show some trades, maybe? Is that one?
Yeah, it's easy for me to talk about all these premium spikes and whatnot, but I'll just show you if you'd like to see. what we're doing is looking for outlier events, right? So whether that's on the gold to silver ratio, one of the things that took place in, I think it was March or April of this year, right? The gold silver ratio hit 90-1. If you could just pull that one up, Gendron, it'll show you that, right? And that's a big deal in my world, right? 90-1 might not mean anything to you, right? It's like, okay, great.
Now it does.
90 is just a random number, but 90 lets me know silver's undervalued, and I'm not just making that up, right? The average gold to silver ratio, and obviously that average is moving every day, is right around 62.5-1, right? So that's kind of like even ground. The gold silver ratio, I can just tell you, I told you I know too many things about this stupid chart, but if we just go back from the year 2000 to present, that gives us roughly 6,400 trading days, right? Roughly. Out of those 6,400 trading days, the gold silver ratio has been above 90-1 124 of those days.
Wow.
Or sorry, above 90-1. Above 100-1 44 of those days, right? So again, I'm not that smart. That's kind of an outlier event to me. So when this happened back in April, we sent out an email to our clients, and I tried to present all of my data very humbly, right? Because I don't know what's going to move the spot price of gold or silver. There are so many inputs. These are global assets, right? Like that's not my game, and I don't care. I don't care if it's going up or down. I'm just going to compound ounces. I'm just kind of staying focused in my little world. So I wanted to see what silver had done after we tagged that 90-1 ratio. So I just went back and looked. And Gendron, if you could pull up that next chart of just silver's kind of performance. And sorry, it's so ugly. But I just looked back at those times when we had tagged 90-1 just to see if it had any effect on price, right?
Yep.
And the effect that it had 6 months after was pretty staggering. I can't see that well, but if I remember right, the average was about a 35% move after that tag. And so at that time, we were also kind of hitting the low end of the range on silver. So we sent an email out. It was like, look, silver's back at 90-1. Here's all the information why that's an outlier event. Here's how silver's price action has performed in the past. I'm not telling you that silver's about to rip by 35 to 40%. It could, it has in the past on these moves, but we're at 90-1. So if you're looking for an entry point into silver, it's all about the ratio for me, first of all. So 90-1 says buy silver now. But we're also at the low end of the range here. It's an extreme tag.
You're talking about the low end of the risk range.
Yeah. Yep.
Because you never had that before.
No.
That helped.
Oh, are you kidding me? Coach, when you have to think too, how I use the quads, right? Like quad 4, that's a big deal to me. Not because the world's falling and people are going to buy gold. That's because silver's about to get shit on, and gold's going to keep performing, right?
Because silver trades like a base metal in quad 4, which is straight down alongside all commodities, and gold earns its premium there.
Because gold's not a commodity, right?
So that's how you typically get, it doesn't have to be the 90, but you get the ratio, and now that we're flipping out of a quad 4 to a quad 3,
it's compressing.
Would be the best time to buy it.
Yes.
If you're fundamentally just starting with the quads.
Yep.
Right?
Yep.
Of course, there's signals and everything else, but I'm happy that risk range informs you.
It's massive. And also just being able to understand, okay, gold is a currency, silver is a commodity. Like that, even just that. Like,
oh my God, I took so much shit for that.
Oh, that's such a, that makes, it made everything make sense for me. And that's why I love quad 4, because.
Yeah, and I never started saying that like 15 years ago, or however many years I've been saying that, just to say it.
Yeah.
I mean, I'm saying it due to the volatility attributes of the two things in two different quads.
Yep.
Right, and general volatility.
Right.
So that's why we say that.
Yes.
Yeah.
And then silver did happen to go up 40% or whatnot, right?
Yep.
Not because I'm a genius and I called it, but that ratio was great. So then, fast forward to May, if you just pull up that gold silver trend line, Gendron. This was just another thing. And again, tried to just really present this humbly, but the gold silver ratio was hitting that trend line that it had kind of built from 2011, right? Like a pretty clear trend line, not that big of a deal. But I wanted to just kind of look at it. So if you go to the next slide, you can see that each day that we tagged that trend line marked the cycle high top in silver price, right? Like to the day.
That's awesome.
Which is also like what makes it a trend line, right? And again, Coach, I'm just a dude that like didn't go to Yale or anything, so I find these things and I'm just like, wow, that's impressive.
You know what's interesting is that I wouldn't know how to look at that as clearly if I didn't go to Yale, because I always say this all the time, one of the only charts that really, or classes that really made sense to me, i.e. one that I didn't get a B- or a C+, was Shiller's course. Because Bob Shiller taught long-term mean reversion. He's like, that's about the only thing that I could discern as being a repeatable pattern. Especially in things like cycles and gold, silver. You know, so when you look, so you're basically betting on mean reversion. And you're also combining the other guy at Yale, Mandelbrot. Because Mandelbrot says it's not about the average price, the valuations of things, the simple moving average of things. It's about the particular thing that happens at the particular time, like on those circles. And that's when you act. And so there you have it. Your Yale PhD, we'll call it.
How about that? And see, it's funny too. You mentioned this guy's name yesterday, and I wanted to bring it up, but I don't really know anything about him. I don't know. He could be like the worst old wall example ever. But in 2020, I read an article when Steve Cohen bought the Mets, right? And I didn't know anything about Steve Cohen. I just started reading about it. And I read about him and how he essentially kind of got his first break was through arbitrage in the options department. And again, didn't go to Yale, so I'm like, arbitrage, like I've heard that word before. But I'm like, what the hell does that mean? So I look up arbitrage and I'm like, that's what I do, right? In my head, I'm like, I'm pretty much as smart as Steve Cohen. You know, like, I'm just figuring this out. But that was kind of the flip of like, okay, this isn't like some voodoo that we're doing in the gold industry. This is just arbitrage, right? And you're exactly right, Coach. And so when you called me and asked, all right, should I buy physical platinum? It's like, well, platinum might go up. If you had your account established, right? Like, let's just say you establish your trust and you want to do what your grandparents did and you want to leave the coins and stuff to your kids, right? And I'm like, Coach, I can have 3 to 4 times the amount of those coins for your kids. Like, that's a pretty good deal. If that was your setup and you had a gold position, absolutely you should buy physical platinum. Let's take some gold off the table, right? Because that ratio is as stretched as it's ever been, right? That's an outlier event. So let's take some gold off the table. We're just going to arbitrage it into platinum, and I'm just looking for mean reversion there, right? Like, it's 0.36 right now. I don't need platinum to go back to parity. Give me 0.6. I'm out. Back into more ounces of gold. That's it, right? It's just an arbitrage game.
That's
but in your case, it was like, hey, I'm looking for this movement in price. And so my response to you is like, hey, yeah, you could buy physical platinum, but the spreads are going to be a little bit wider. It's going to be a little bit more inconvenient for you to sell, you know, for what you're looking for. You should probably buy PPLT. That's just kind of
which is, yeah, we're out of time now, but I could keep going because, and I will keep going with you on the phone, like because that's exactly what I did today. But I did it in paper space. So I sold some gold, GLD and AAAU actually. So in Portfolio Solutions, people will see that. And I bought some PPLT.
And I didn't tell you that PPLT was fake and worthless. And
we're good.
That. Okay,
yeah, that's totally good. Well, this is awesome. Like I've never had a conversation like this. I don't think anyone who's watching this would disagree that it's very much like the education that we're trying to provide here. So that's like we really baseline something, and I think we can now build on something.
We already talked for 45 minutes?
Yeah, we did.
I didn't get to shit on CNBC at all. That's just devastating.
Well, you're not allowed to do that here.
Oh, yeah. I wasn't going to do that, but no, I really appreciate you letting me come out. And yeah, if you guys have any questions, there's plenty more, but I'm just going to shoot straight with you and tell you what I think is probably best.
Yeah, that's cool. I appreciate it. And thanks to the McAlvany family. Like, if you're watching, we sincerely appreciate it. It's hard to build a business that's based on transparency, accountability, and trust. But those are 3 core principles that I will go to the wrong side of the grass with. So looking forward to the next discussion. We're going to have a little fireworks with my buds, Daniel DiMartino Booth.